Yeah, welcome everybody to the 35th FinTech Meetup Europe. Actually, we have been called FinTech Meetup Cologne, but during Corona, we just rebranded it, and we have also some new colors. So I hope you recognize us still. And we have, maybe introducing ourselves. Tonight host is me, Matthias Schulze. I'm working in IT management consulting, also running podcast and the FinTech Meetup, also engaged in this FinTech Weekly magazine. We have also another co-host from us is also Lena. She works in a bank and has been also a FinTech founder. She's not with us today due to a business trip to India. And then we have also Yaan here, who is serial entrepreneur and agency owner, also founder of FinTech Weekly. Topic today, theme is decentralized finance. Last time we made some more conservative topic about core banking. This time we also covering the new finance space. Again, we have a really great lineup for you. Just introducing quickly, we have Tim, we have Alexandre, we have Yaan, and Mona and Rich, and I'm not talking about them too much because they introduce themselves in a quick pitch. And actually, while researching for the topic today, I found out that it's really an important topic because we're talking about the future of our whole financial system, not only financial system, also other systems. And currently, I've found the numbers that was the size of decentralized finance was 13 billion in 2020. And it is supposed to be 500 billion in 2028. So quite sizable. And it's growing at a rate of 43%. Here's a link if you don't believe that report. I also still can't believe that it's getting that big, but they have written it, so it must be true. Just maybe some quick and short information that I found in this how's the guy called? Horowitz. This is AZ venture guy. I'm not good with names. I think the name is written here, Andreessen Horowitz. He published a report, I think 2 days ago. And there is the summary where they are talking about this recent downturn in crypto. And they're just saying, okay, that's a new, just part of the cycle that people are now getting back to work, building. And then when interest and prices are rising again, then there's even more interest and there will be new ideas and new startups and so on. So it's just right now starting the phase in the cycle where people are building and some startups are surviving, new ideas are getting born and so on. So just part of the game. Then he's also pointing out that we have, for example, the Web3. So one of the important things why it's there is that they compare it with the big tech that take up to 100% of the share or what the value is from the creators and from the people creating content. And for example, if they compare it to the OpenSea, where they just have taker fees of 2.5%. So it's a much lower chunk that the platforms are capturing. Then they're also talking about the impact, and they're saying, okay, DeFi is has a size of the largest US banks with compared to their assets under management. So it's really a sizable industry that is basically born. And they pointed out that Ethereum is a clear leader in DeFi, so most things are built on top of DeFi, but there are also some challenger blockchains like Solana and Avalanche and so on, Phantom. So it's so there's a clear leader, but there are also some new projects that have a lot of traction and also bugs that are currently fixed. So oops. Then it's still early days. So Horowitz said that DeFi Web3 is growing at a faster pace than it's the internet. So they have here in orange the growth rate of the internet, up to 1 billion internet users in 2005. And they, as you can see by the violet color, the adoption of wallets, or the number of Ethereum wallets, is growing faster. Yeah, so that's some quick information snacks. And I would like to start with the pitches, or basically at first from Alexandre. He's I would say, crypto influencer, but he says he's an analyst. He is currently at the, I think, permissionless in Palm Beach in his hotel room. And I just asked him, because he's done a lot of research in the space, if he can give us some information about the biggest trends in DeFi, just quickly, like 5-10 minutes, and what he heard on while visiting conferences and so on. So yeah, Alex, your turn.
Thank you so much. And I put on the video here for a moment, just say hi to everyone.
Hi.
I want to thank you. Can you hear me okay?
Yes.
Okay, perfect. Here we go. Hi, everyone. So I got my conference badge here, still permissionless, still going on. I want to give a bit of my broad takes. First of all, as to what I do, I'm the founder of a website called thelatestblock.com. That's like block, like blockchain. So the latest block for the latest crypto and fintech news. So it's a news curated news engine. So all the news from across about 20 different websites is there. And then I have my own blog. I've been doing analysis on the general market, macroeconomics, or Bitcoin or specific crypto projects. And I share that several places, including on the latest block in those cases. I've also been featured in Forbes, and I write the Wednesday column for quantumeconomics.io. And I'm the director of blockchain market research. So as regards to this conference, permissionless was put on by a crypto media company called Blockworks, and Bankless, which is one of the largest companies in the Ethereum ecosystem. And it billed itself as the DeFi cultural event of the year. And with over 5,000 attendees in the format, I would say they did an excellent job of that. They're a bit smaller. The Bitcoin conference was 25,000 people. I think consensus next month in Austin, Texas is expecting 15,000. So it's a bit smaller than those two, but it's their first conference they put on. And they're really focused on the networking and the culture. They took over essentially one of the streets with lots of bars and restaurants last night. So it's pretty much a cultural event. They nailed that. So some takeaways from the conference. I think it's interesting that this happened, first off, a week after the collapse of Terra Luna, the UST stablecoin, which is what it's called an algorithmic stablecoin. It wasn't backed by assets, but it was attempting to maintain a peg or an anchor with the US dollar, right? And it failed, right? So Terra, which was the token of the ecosystem, is like a crypto, is speculative. It was supposed to back this UST, which is supposed to be a dollar. So a total of $40 billion essentially of value was lost. And it had a pretty sharp effect on the crypto space. I think 100 million in total value was lost in DeFi. But I will say this, DeFi, I'm still bullish on DeFi long-term. It's going through growing pains. So the reason I said that was I was expecting a bunch of people crying over there, at the bar, drinking their sorrows away. But I got a very different flavor. This conference really showed the people here are the builders in the space. Bear markets, in any case, but especially in crypto, have been an excellent chance for the excellent projects to stand out, the builders to really keep building, and the really well-managed, well-organized projects to survive, maybe tightening their belts, but surviving nonetheless. And the really cash grabs and the scams and the very poorly organized projects are gonna die. They're gonna fail, right? So that's one of the silver linings of a bear market. That being said, so the attitude is pretty, pretty pumped for a crowd walking into that environment, over 5,000 people. The conference is great. A couple takeaways specifically from the conference that I had was that, first of all, there's a lot of big industry players here. Obviously in the crypto industry, Coinbase is one of the main sponsors, Ledger's here, Robinhood, but also Visa has a booth. Google and Microsoft sent a whole bunch of employees to the conference. So I think that's a big deal to see, significant, attendance from those companies is an acknowledgement that they see Web3 as the future and DeFi as an integral part of the future financial system. So I think, they don't want to be left behind. Also, Circle is a company that is behind the USDC stablecoin, the second largest stablecoin by market cap. And it's since the beginning proven and been audited and shown they have, dollar assets in a bank account to represent every USDC. BlackRock, the largest asset manager in the world. BlackRock has $10 trillion AUM as of January this year. They just invested $500 million in Circle. So Circle had a booth there. Circle's behind the stablecoin. They're also heavily backed by Coinbase. So it shows that USD is the future of stablecoins. It's not going anywhere. The other thing was that, so aside from big industry players, so there's a lot of technical releases. Robinhood announced a self-custody product they're launching this year. Robinhood, the popular stock and crypto trading app, is going to enable people to hold their crypto there, hold it on their own wallet, and actually self-custody. And they're aiming to do so with no fees, just like they do with their stock trading. So that was a release. Ledger, the company that's behind the hardware wallet, released a desktop wallet extension so that you can connect your wallet there. So I think it was big to show a lot of the people in DeFi are looking towards self-custody products and more easier user experience, because a lot of the problems in DeFi are around the fact that, first of all, it's hard to use. Many products you really need to be almost a computer programmer to understand it, and there's a lot of effort in the industry to make it easier to onboard more people. And the other thing is that for those in DeFi, there's a desire for kind of the real dedicated players and users to actually have self-custody, meaning like essentially there's two ways you can hold your crypto. You can hold your password, or as they say, seed phrase or key, or you can put it in a crypto company which holds your crypto similar to a bank like Coinbase, right? So in some ways, it's really a centralized service. You're just holding your Bitcoin or your crypto or your Ethereum, right? So there's was a lot of products in the direction of self-custody, and a lot of products to make it easier for the general public. Last comment I want to make, there's been a lot of news in the last week about this Terra Luna debacle. Some people comparing Bitcoin to this Terra Luna, or all of crypto to Terra Luna. But in actual fact, and the founder made some really, stupid comments on Twitter, honestly. But, most of us in crypto don't agree with those comments, and, actually consider this a healthy correction, and showing that crypto doesn't need a bailout, unlike the US banks did in 2007. Crypto is regulating itself by the free markets deciding. Nick Carter is a well-known figure in crypto. At the conference, he said, Terra Luna is reckless financial engineering, and that stablecoin isn't necessarily a Ponzi scheme. They did set up a kind of Ponzi system, but it was their reckless financial engineering. It can be done right. It can be backed by fiat assets, which USDC does. USDT actually came out today, not in the conference, but a lot of people were speaking about how I think USDT Tether, which is another stable coin, is like Luna, and they came out and said, we've got 90 billion in assets in the bank. Here's our audit. So I think there's an effort on the part of the good companies in DeFi to really show that this was an outlier. This was part of the growing pains of decentralized finance. In DeFi, in crypto, anyone can build an app, right? And some people build great apps and some people build garbage. That's one of the liabilities of being decentralized. So, but as the space matures, I think the market and the players see, you know, it's going to be a lot harder to pull a fast one, to put a Ponzi together, to get fast money, get cash grabs. I think it's a moment of maturity and growing pains. And I think DeFi is going to come out of this stronger and smarter. Yeah, so that's my take from the conference and what I see with world events. Really happy I'm here and happy to share and answer any questions you have. And I'll be covering it, sharing the news on thelatestblock.com and with you all. So thank you. Great to be here.
Hey, thanks, Alexandre, for the update from the permissionless. So yeah, I hope then all the coins are doing some effort to build more trust with the users, and yeah, that we don't see so many outages like with the Luna coin. Okay, so then I would like also to hand over to Yaan. Maybe can you yeah, introduce our other panelists and speakers quickly so that they can introduce themselves.
I hope you hear me well.
Yes? Sure.
Okay, cool. Hello from my side. Welcome and good to see everybody. I just wanted to add maybe one thing, because I'm seeing in the chat that someone exchanges some LinkedIn links, and I encourage you to do it, because this value of this meetup is not only listen and maybe asking questions, but maybe exchange yourself and growing your network. So please put your LinkedIn profiles to the chat and talk after the meetup. Yeah. So I would like to introduce to our pitch speakers. I will do it one by another. So starting with Tim. And our first pitch from Tim. Tim is founder of Issuer, if I spell it right, and an expert when it comes to investments, and since 5 years active in the DeFi world. So Tim, please tell us more about Issuer and your thoughts about DeFi.
Yeah, sure. And hi, everyone. Thank you for having me here tonight. Yeah, let me maybe just introduce myself briefly. I'm actually really a child of the traditional finance system. So I've been in investment banking, specifically equity research, credit research, portfolio management for like the last 22 years. Around 2017, I got into the rabbit hole of crypto. So I remember that very well. I was firstly introduced to this by a friend of mine. I said, this is all scam. And right after it, we saw Bitcoin tanking by like 20–30% over the summer. And I was like, okay, I was right. And nonetheless, at the end of the year, I started to read into this more, and something which I would encourage everybody to do, just to try it out. And it's really something, I mean, you don't need to have big money or so, but just check out the technology. And so I read some books, and I got into the Ethereum ecosystem at the time, and found out about an app which most likely was one of the first DeFi apps that we have had, and the app was called Ether Delta, which was basically the first decentralized exchange. And I came from an investment bank, and we had like a trading department. We had, I think at the time, we had 80 employees. We had 5 traders, and I think we had 7 people in back office and middle office. And now there I am, and I see this app, which basically looks like a normal stock market. You couldn't buy and trade stocks. Obviously, you could trade any coins there, most of them shit coins, admittedly. But the technology was just fascinating for me, because when you see that you have 8 people working in middle office and back office trying to settle securities, and then you have this app which is maybe like 2,000 or 3,000 lines of code, which you can use basically to trade permissionless any type of coins, which obviously could also represent other things than just thin air, as we haven't had it in the case of US dollar tether, UST. That was quite fascinating for me. And at the time, I started to mentally develop a model coming from financial background, sort of the financial engineering for a synthetic asset protocol, which you can use to basically bring any real world asset that has a market price in the real world and the real economy onto the blockchain, because that's obviously the problem. And when we're talking here about, for example, USDC, so US dollar circle, compared to UST, both are stable coins, but the technology behind it is quite different. USDC is basically a backed coin. So there is somebody holding assets worth $1, and you can at any time exchange your assets and get the real assets. That is obviously something which is pretty difficult to do, and especially for regulation is very difficult here. So I have thought at the time, coming from a financial background, about a different model, and that is what I have actually developed then later when I started to learn Solidity and learn to speak the language, so to say, of the blockchain world, especially the Ethereum-based blockchain world. And this app Issuer, basically the name behind it is sort of like we're using the term the issuer. The issuer is the entity that is issuing securities, and this is where the name comes from. The Issuer was born, and I developed this over a period of, let's say, now 18 months technically, with some basically some friends of mine which I had known from university, and yeah, so this is where we are. We are actually we have had a first version out already last year. Basically, we use this to bootstrap our sort of like our coin holders, because the token holders are actually the governing people behind the system, because Issuer is actually a DAO. And the reason for this is not only because we are decentralization maximist, but specifically because it's very difficult in terms of regulation. I mean, if you bring out an app on which you can trade, for example, a synthetic Dow Jones product on the blockchain, this is something which the regulator, if you operate it, might not like. And therefore, basically, what we have done is we have created a completely decentralized system in which nobody has any special rights. So I am you can call me the founder or the developer. Actually, I'm one of the first core contributors to the DAO, but I have no other rights than any other people in this in the decentralized autonomous organization DAO. And basically, the whole governance process, for example, which assets will be added, etc., are done by consensus mechanisms on chain. And this allows us actually to operate the system in a completely decentralized way. And actually, even if the regulator would ask me to shut it down, there's no way I can, because basically I'm not personally putting the assets on the chain, but it's decided on by the DAO in the end. So if you would like to try it, obviously feel free to check it out. We're actually currently in the process of launching the second version of it, which will offer all of the governance functions, which might also be interesting for the one or the other. We will be a true multi-chain system, which we use a technology called Layer 0, which is protocol which came out a couple of weeks ago. We're in intense discussions with the guys, and basically this means that you can bridge the token. Our governance token will be called ISS. You can bridge it to any chain which is supported by Layer 0, which is currently 7 chains. And maybe lastly, in terms of competition, our biggest competitor actually just got eliminated, so to say, and I'm not happy about that. But the biggest company which did something similar was a protocol called Mirror. They offered synthetic securities, for example, like stocks and stuff, but they were built on the Terra blockchain, and they were using UST as a backing, and that is no longer really working anymore. So yeah, happy to connect, and if there's any questions, just let me know.
Cool, thank you. Thank you very much. We will have the panel after the pitches. And yeah, if you have any questions, write them down to the chat, or we can discuss it later. Thanks very much. So we move on to the next pitch. So Mona is also here. Yes, I see Mona. Hello, Mona. So let me introduce Mona shortly. Mona Tiesler is the VC at Tocantus, focused on investments in the Web 3.0 and decentralized theme. And Mona, can you tell us more about the investment strategies you have and about Tocantus in general?
Hi, everyone. Yeah, hi, my name is Mona. I work for a venture capital fund as an investor. The fund is called Tocantus Investments, based in Frankfurt, but I am based in London. And I guess what we do is we invest in seed Series A level startups, so a little bit later than just having an idea. And we are focused on DeFi, decentralized finance players, and infrastructure players. So companies that support the decentralized world or the Web3 world through provision of infrastructure. I can give a little bit of a very quick background, I guess. My journey has been all over the place. Strategy consulting in London for a few years, 2 startups in Germany, 3 startups in Germany, an MBA in Singapore and Paris, and then Berlin for a while, again, another startup. And then I went to, what kind of startups? Education technology, food technology, and FinTech. So pretty much everything full across the board. And I ended up in investing because I've been interested in the cryptocurrency or blockchain space for a while. In 2013, I held my first conference at a university on that topic, was told I'm crazy, and maybe thought I was a little crazy too, and didn't really pick it up as a full-time job until much later, but have now kind of dedicated my time to work with startups in that space. So very, very interesting. And why do I find decentralized finance or generally this space very interesting? And why are we investing in startups in that area? I would say in general, you know, DeFi is, it's essentially providing kind of services on the blockchain that are now extremely inefficient in our traditional financial system. So right now we have pretty slow settlement cycles. We have inefficient price discovery, liquidity challenges. We have lack of assurance around the underlying assets. We are not in control, real owners of where our money and our assets are. And also, you know, seeing many difficult situations like the GameStop short squeeze, for example, we kind of see that there's a few inefficiencies in the current financial system. And I think that DeFi, with all the problems it still has to overcome, provides an alternative for the future that really will enable a lot of people to access financial services. It will allow for equality, and it will allow for a lot of efficiencies to be created in, you know, settlement, payments, lending, trading, insurance, asset management, you name it. So that's why I'm now looking in the space for interesting startups that are kind of bridging that gap and will allow for, you know, adoption, more mass adoption in the space, and providing more security, potentially more regulation and more safety, that more people will be able to use this in the future.
And what are your best startups you currently have in the portfolio? I've seen that this NIAMS has received regulation in the Bermuda Bermuda Islands?
Yeah. So Names is the name, NAYMS, Names. And what they do, they're an insurance provider. So they essentially insure your cryptocurrency exposure. And they're the first insurance provider that is now fully regulated through 2 different licenses. Therefore, a kind of a normal, let's say, insurance provider, but for this world, which is a pretty big milestone in their, roadmap, and also in general for the blockchain space. So we're very excited about that. They mainly work with B2B, so other businesses for this insurance play. And also some of the ones you might know are Celsius, which is kind of more a centralized finance, a CeFi player. Has received recently some controversies after the Terra or Terra Luna problem, but yes, let's see. We stand strongly behind that business, and we have a few other ones like Credo, for example, that are I would say quite big players, or BCB Group, past Series A stage in the space with a lot of uptake.
Yeah, great selection. Great selection in your portfolio. Okay, Yaan, who's next?
So I see in the chat that there are also startups. They want to connect with you, so you have the chance maybe to chat later together. So our third pitch is from Yaan Lan.
He's also sharing a slide. I think I have
Hi. So he's co-founder of Fiat24. He wants to revolutionize the way of oh sorry, my notes are gone. The way of banking in the Web 3.0 and metaverse world. And Yaan, could you tell us more about your vision and how the revolution you're planning looks like?
Yeah, sure. First of all, thank you for inviting me. Maybe a few words about myself. I'm also a reveller of traditional finance. I even worked for a German bank in Frankfurt for several years. And after financial crisis, I moved to Switzerland, worked for 2 private banks, and then to Hong Kong since 2016. I have been full-time in crypto space. And right now, the whole team is based in Switzerland. And in a nutshell, what we are doing is that we try to produce a prototype of core banking system that is in line with Web3 philosophies, and simultaneously solve some daily issues. So whoever traded crypto, he must know that there are many ways nowadays to buy crypto, but it's very difficult to sell it. There are only very few channels. Even if you have channels or you have like accounts with regulated crypto exchanges, if you transfer like a big amount of money to your bank account, your bank might have some issue with you, right? So what we are doing is that we offer a Swiss bank account, which is seamlessly connected with your crypto wallet. It's kind of, you can connect your MetaMask with our DAPP and convert any token in your MetaMask to fiat money and withdraw to your bank account or spend it by swiping credit card. Yeah. So our unique selling point is that we might be one of the first bank that is built on Ethereum. And basically we build a fiat layer on top of your crypto wallet. And behind your crypto wallet is a decentralized exchange. That's how we convert token to fiat. And we will offer you a Swiss IBAN account and a virtual card that can be put in Apple Pay or Google Pay. And we are fully regulated under Swiss law. Well, we hold a Swiss FinTech bank license, and which is a new category of bank license introduced in 2019 to encourage FinTech startups in Switzerland to do some prototype or experimental projects. Well, the license allows us to take public deposit, but up to 100 million Swiss franc. Beyond that, we might have a possibility to upgrade our license. Yeah, the ambition is to upgrade our license to a full bank license. Well, you may wonder how do we do the whole compliance thing? So we introduced a new concept, which is giving you an NFT to your MetaMask wallet. By doing this, we somehow white label your address. And the NFT will be your unique bank account, and your client profile will be linked with this NFT. By doing so, we have full control of who is owing the money and who is transferring money to who. Yeah. So we have a very simplified KYC process, which is fully online. So you go through a KYC process with your mobile, and we check in the back end your profile and do all necessary regulatory homework, and we will open your account within 48 hours. So this chart gives you a little bit flavor how bank will look like in Web3 age. Well, in the Web1 age, the bank, so this must be the most familiar scene to you. So whenever you open a bank website, you're supposed to put your login detail and password and to log in. This is Web 1.0 concept. And Web 2.0 is that, the payment gadget is integrated in your browser. Is kind of like a PayPal experience, but in Web3 age. So the first thing you need to do is to connect your wallet with the bank DAPP. Yeah, so this is what we are doing right now. We have been doing this project since 4 years. The company started in 2018, and we finished the 2-round fundraising, and we received the license last year, and we launched the beta version also last year. So going forward, we will have a kind of token sales and enable Swiss IBAN and give you a virtual card, and also, to be listed on crypto exchange and expand to other protocols, because right now we are only on Ethereum, and we will expand the whole concept to Solana, Polygon, Polkadot, and so on, and other mainstream protocols. And once we reach 75 million client deposits, we will apply for full bank license. Maybe we will change the name to MetaBank if the name will not be taken by them. And then we also plan to do an IPO, maybe in London or in New York. So we might be one of the very few project that is listed both on crypto exchanges and traditional security market. And we are proud to be one of the top 50 Crypto Valley project alongside 14 other unicorns, including Ethereum, Solana, Cardano, Tezos, and so on. This is our team, and we try to leverage on the latest technology and do everything by smart contract to limit our human work. The team will be capped at 13 people. So we have a bunch of famous investors, and you can find us through many channels, but right now we are doing airdropping. You will find the detail of airdrop via our Twitter. I will put our Twitter in the group chat. So please do follow us and be part of us by minting NFT and get the free airdrop. Thank you so much.
So thanks a lot. Maybe you can share your slides somehow in the chat if you want to, that people can have a look, or part of the slides. That would be very cool.
Okay.
Okay, last but not least, we have our last pitch from Rich. Rich.
Hey, everybody.
Is it right? Okay, co-founder of Simple DeFi, a blockchain veteran and a blockchain expert active in the Certified Bitcoin Professional with the Cryptocurrency Certification Consortium. Rich, maybe you can pitch us how the future of DeFi looks like.
Certainly. So yeah, my name is Rich Howe. I'm here in Denver, Colorado. I know this is mostly European centric, but I'm representing my company as one of the co-founders of Simple DeFi. And the general purpose of Simple DeFi is ultimately to be the first product is a yield farming aggregator. It's multi-dex. It's chain and dex agnostic. That is to say, whether all of the EVM compatible chains and even the other ones, Tezos, Cardano, and all of that stuff, our main goal is to aggregate all of the liquidity pools and all of the yield farming opportunities into one unified, simple to use interface. We're not an AMM ourselves. We don't compete with them. We just aggregate them, and ultimately we improve the user experience. So we identified that yield farming in general was too complicated, took too many steps. I've been in crypto since 2010. Literally, I got doxxed. I remember the oldest Bitcoin receipt I have was $5 for a Bitcoin. So, anyway, so we identified the problem of yield farming was a bad user experience. And ultimately, our thesis was there's a lot of forked code in the space. And when you fork code, you really carry over that user experience in one way or another. So if you've used Uniswap or SushiSwap or PancakeSwap or any other swap, ultimately they're all forking code from each other, and that user experience carries. So we identified that as a barrier to entry, right? Because there's something like 300 million crypto wallets out there, and less than 2% are interacting with DeFi protocols. And it's not necessarily because they don't know they exist. There's a lot of frustration and I'm going to call it friction as far as the user experience goes. So what we've done is we've provided a solution. We've turned 12 steps to enter a yield farm down into 3 clicks. And that carries over if you want to move across farms, modify your position in your farm, or liquidate your farm, or even go across chain. That's the goal. We're in very late beta right now. We're also in the late stages of a InsurTech contract audit that's been ongoing for a couple of weeks now. We've got a full in-house dev team. They've been working together for something like 25 years. I'm the youngest one on the team, so I really bring the native crypto knowledge, and they bring a lot of the business side and the development and just practical experience that you only get with age. So back when there are more people on this Zoom call than there used to be at actual crypto conferences way back in the day. So I'm really excited that everybody's here, and I love all the projects that have been presented so far. So I used to work, I got into the space professionally and not just out of curiosity back in 2017. I was one of the first hires back at Shapeshift.io with Eric Voorhees. And that was great. I learned a ton, very hands-on, especially during that 2017 bull run. Things just got out of control. The office was wild some days, but I left that to pursue another opportunity, and that was I was one of the co-founders. It was the first privately owned exchange on the Binance Cloud architecture called Mandala Exchange, and that's still up and thriving to this day, and I've left it in good hands. But I stepped away. I was really interested in DeFi, and I'm just kind of monitoring the space. And honestly, even someone like me, I know about yield farming. I knew how it worked. It took too much time. Like I have better things to do, right? Like I can't sit there all day, go through 12 steps, play with all my farms, and risk of getting wrecked. So ultimately, the reason we built this product, besides ease of use, is in a broader financial sense, we see obviously inflation, printing of money, general bad monetary policy on the fiat side from centralized banks, and that kind of obligates and compels people to go ahead and find a safe haven. And historically that's been gold or Bitcoin or whatever, but whatever they can do to maintain their purchasing power at the very least, and at the very best actually earn a profit. So obviously we identified a huge untapped user base, and we think with simplifying access to all these DeFi protocols, you'll get that 2% of wallets using DeFi to greatly increase, right? So there's a lot of potential there, and the barriers to entry are not a lack of curiosity or willingness. It's just complicated and very convoluted. So ultimately, what we're trying to do is access that untapped potential. If you don't mind, I'm going to go ahead and share my screen. I've just got a couple slides I'd like to share. It says you disabled screen sharing. So
no, you are fully enabled. Let me check your permissions.
Sure.
Okay, my fault.
No problem. All right, so this is our team. There's my silly face, but more importantly, here's everybody else that makes this happen. Alex is our CTO. He's got a great development team under him that I spoke about recently. Some of our strategic advisors and supporters, crypto natives, and just business experience that it's hard to rival. So just to take a look at our roadmap, like I mentioned at the beginning, Simple Yield is our first product, and we'll just obviously moving in this direction slowly. Our partner liquidity pool and our partner liquidity protocol, I'm not going to go into too much right now because it'll take way more than my allotted time. But just to give you a general overview of the entire ecosystem, as Simple Yield is the first product. But let's break down, what's our first product? What's that look like? So here's Uniswap, here's PancakeSwap, and this is from their own Telegram. We're not making this up. Like, this is how they explain it to you. And then you can see the comparison. So we've broken down all these steps, we've distilled them with our own architecture down to 3 clicks. And if you want to take a look at our beta, it's available there. And I'll share that again, so don't worry. But here's just a competitive analysis based on market research. Here's a number of other aggregators or DEXs or AMMs, anybody that offers yield farming or aggregates it. And obviously, I think just taking a look at this, you can kind of understand exactly what our approach is. So, and to reiterate, most of this stems from them all being forks of each other. So that's a problem. We built our code from the ground up, no forks. We've been working on it for a year. So I'll just go to this slide, and this really kind of sums up who we are and what we're about. So I suppose that's it for me. All right. If anybody has any questions, I've left my LinkedIn in the chat. So just let me know. And thank you very much for having me. I really appreciate it. All the other projects have been looking awesome.
So thank you very much. So also if you can share your PDF or slides you want to share to the listeners would be perfect.
Sure.
If you share the link, we can post it to our newsletter FinTech Weekly, which is also have a high subscriber, so high amount of subscribers from the US. So it's also interesting to get your content there, and also everyone else. So I posted some links. If you have interesting content you want to share through our newsletter, just let us know. And also we created a new Telegram group. We want to, maybe build a small community around our newsletter and this meetup to stick together after the session is finished. So thank you very much. And Matthias, I'm handing over to you because you will introduce our listeners to the upcoming panel.
That's true. Now also my second kid is entering the office. Maybe because I told them to stay out. Can you go? Can you please go? Okay. They're very good in timing. So I thought we talked with Alex that he wants to, if he wants, he can also moderate the panel. So at least that's what we talked about. Alex, are you ready?
Yeah, absolutely. I'm looking at the agenda. I wanted to see if you wanted me to, I guess we're at the intro. I'm happy to start off.
Okay. So maybe just introducing, so we kind of. Okay.
Good. Yeah. So I guess the panel now is Tim, Mona, Rich, and it says Yang on the picture, but it's not Yang. Excuse me. Is that Yang or is it someone else?
Oh, it's me. It's me.
Oh, it is you.
My avatar.
Okay, good. Sorry about that. Okay, great. Wonderful. So the first question, I guess I don't have to answer the questions. You guys and ladies will be the one answering the question. So the first one for everyone listening is, what is DeFi and what isn't DeFi? Please try to give a 1-sentence definition. So I guess first, you go the sequence of how it appears in the photo. So who's first? Sorry, just adjusting so I look at the picture. But who's first? You want to go first, Yang?
Well, sure. I mean, seriously, DeFi is decentralized finance, as the name implies, but essentially is kind of to use the smart contract to run the logic of financial product.
Great. Okay, good. So then, Tim, what's your 1-sentence definition of DeFi versus what is not DeFi?
Yeah, so for me, DeFi is when lots of individuals in a decentralized way take the role that is normally taken, or as used to be normal at least, by a centralized organization such as a bank. And on the other hand, what is not DeFi? DeFi is not Ponzi's and scams. It is part of it, but this is not sort of like the core, and we shouldn't make the mistake to take bad examples as a role model for the whole space, because that's clearly not what it is.
Thank you. A very good point. Very important point, especially right now. Next, I want to go to Mona. What is DeFi? What DeFi is not? Try to keep it in a sentence or near that.
What I would say is DeFi is taking out the middlemen, such as bank or other traditional finance players, and replacing those by software that are blockchain based. So smart contracts are doing the work, making markets, settling the trades rather than a middleman. And what DeFi is not, I would say even higher level, what I hear sometimes and what people ask me, I would say DeFi is not neobanking, it's not FinTech. It's very different things. DeFi is decentralized and not centralized.
Thank you. Excellent answer. Next, going to go to Rich.
Sure. DeFi is a complete rejection of a failed monetary system that has constantly haunted us throughout history. And it's us taking back ownership of what is rightfully ours in the first place. And that is our money and our own freedom, essentially. And exactly to Mona's point, just complete rejection of the middleman, everybody greedy that needs to be cut out of the system. That's what DeFi is.
Thanks, Rich. Thanks all of you, Tim, Mona, Yang, and Rich. Great points. I want to throw in my own thing. I kind of looked at sometime in the past, kind of characteristics of DeFi versus general cryptocurrency. I'd find the 5 things that define DeFi are non-custodial, open, transparent, programmable, and decentralized. So that's my answer to my own question here, which Mateus put together. Anyway, great answers, everyone. Gonna move over to the next point and talk about the evolution of DeFi. We're still experiencing growing pains, but we've come a long way. So I'd like to look at, let's take a look at DeFi 5 years ago or 2 years ago versus now. And what do you see the future of DeFi, and what are the main areas that will change from where we are now, where we've been, and where we're going? So now I have the paper in front of me. Apologies, I'm gonna reorganize the sequence. So I want to go to Tim first, then Mona, Yang, and Rich. But yeah, looking at the past DeFi, where we're going in the future. Tim, you go next.
Yeah, sure. So basically, I think that when DeFi started, basically there were some very basic applications. I mean, very specific also to the crypto space. So the first DeFi applications were basically stable coins, which were giving sort of like a new product to the space, and decentralized exchanges for cryptocurrencies. So something which you would normally not need outside of the crypto world. But I think that looking forward, basically more and more products, as we said, what we're doing with Issuer, synthetic real world assets on chain. We will see insurance products that we know from the normal banking world, and we will be able to use them on the blockchain. And maybe in some further away future, I don't know if it's time in crypto is running like 5 to 10 times faster than in the normal world, it seems. But hopefully at some point we will also see more and more products which are only possible because we are using blockchain, which are actually not even possible to do them on in a centralized way.
Thank you so much. Yeah, so next I want to go to Mona for that. Again, the question focused around, it was DeFi 5 years or 2 years ago, where we are now and where we're going in the future. What are the main changes?
Sure. I think that in general, we all know that this ecosystem has kind of developed in a variety of stages. So initially, I think we've seen kind of the market inefficiencies, and there was a gap. So we initially often saw kind of lending and borrowing platforms like, I don't know, Aave, Compound, where you kind of got rewards for lending and providing liquidity at lower interest rates when you borrowed than if you did that at a traditional bank. We saw then kind of growth through decentralized exchanges with automated market makers. We saw DEXs like Uniswap, SushiSwap really exploding, I would say, and many others. And then we understood that there was benefit from arbitrage opportunities. DEX aggregators started to emerge after that, like 1inch, and more optimization started to creep in, with us still a long way to go. We have then kind of looked at, I don't know, governance tokens, the emergence of DAOs. In the DeFi space, these government tokens open up opportunities like yield farming or liquidity mining. And, we are, I think, in the process of optimizing a lot of these things. But I really would agree with, I think, what Tim said, that I also see tokenization of real world assets and the trading of these fractions of ownership, fractionalized ownership assets, really as a big thing for the future. I guess you could argue if that's DeFi or not, but in essence, I do see that as a big let's say, financial opportunity that's going to come up.
Wonderful, thank you. Yang, sorry for the switching around the sequence, but thanks for your patience. So Yang, past, present, future, DeFi, where do you see us going and what are the major changes you see?
Well, I agree with Tim. Yeah, in my opinion, I believe that DeFi started also with a stablecoin. I remember it was back to 2017. And I do believe that even the Tether team didn't realize that it was DeFi, but it was clearly that a payment system that without any human intervention and functioning in a very efficient way. Yeah. And 2 years ago, I think the DeFi hype started with the fact that the trading volume of Uniswap surpassed that of Binance like 2 years ago. Yeah, and then we have like a V curve. But I remember that RV started 4 or 5 years ago, but without Uniswap, so no one really know RV. But after Uniswap emerged, and there are a lot of DeFi protocols and projects become very famous. Going forward, I think because we have been in conversation with regulators since last 4 years, so for regulator, DeFi creates really headache for them. First of all, DeFi project, they are global, so there isn't any global regulatory framework for DeFi. And right now, the regulator try to push the DeFi project away from their responsibility. But I do think in the future it will change. Yeah. So if DeFi really will grow, it has to come into somehow agreement with regulator, and there must be technical solution for it. Yeah. So this is my opinion.
So Yaan, basically, just to interrupt this.
Thanks for that. Yeah, sorry. I was muted.
Okay.
Is it me then? I'm up. Okay.
No, take over. Or yeah, Rich is up next, unless you wanted to stop that, Mateus. Go ahead, Rich.
Sure. DeFi started even before Ethereum. There were side chains on Bitcoin. One of them was called Counterparty, and it was a primitive version of NFTs. It was called Rare Pepes. So Pepe the Frog, that guy. And it wasn't very efficient, obviously, given the nature and mechanics of the Bitcoin blockchain. So it just became impractical. And in fact, Vitalik actually proposed building his smart contract logic on the Bitcoin blockchain, back on the Bitcoin forums in the day, and it was denied. And that's why Ethereum exists today. So Bitcoin or DeFi really started with smart contract logic and the ability for people to interact with an agreed upon governance or set of rules without any intermediary. So that's really where it started. Obviously, Ether Delta and then Fork Delta, hugely important as far as trading value in a decentralized way on a DEX. But obviously the user experience was absolute garbage, to put it politely. Even for someone that knows what they're doing, it was garbage. So, where is it going in the future? Obviously, greater accessibility. There's a lot of untapped market, as I mentioned previously. So just all the newcomers, not just the people that know about DeFi and the people already in the space, but my parents, for example, people that there's this huge potential. They're sitting on capital. They're getting destroyed by markets. They don't really know what to do with it. And certainly user accessibility, making it just easy to use, no stress, no more copy pasting the wrong address. I'm sure all of us have done that, sending your coins into the ether. Certainly, that's not a good user experience for my parents. So if we want to continue to grow the space, we need to increase accessibility.
Oh, now I have to also ask something, if you allow me.
Sure.
So I found out that in the end, there's everything is, or a couple of things are there from the protocol, but they're really difficult to use. So I also have seen, okay, I can make like 20% DeFi, but it's too complicated, or I'm just too lazy. And now you just simplifying the process. I've seen on Fiat 24 that they are just putting a layer on top that improves usability, and now you are doing it. So basically, Tim has not done it, but he did something else. So how important do you think is the usability and this form of or centralized access to decentralized finance, basically? Rich?
Are you asking me?
Yes.
How important is accessibility? It's literally
or the more the usability, or that you put the user interface for the adoption, because you have decreased, I think, the number of steps. I also have seen that Fiat 24 is doing a lot. I think most of the startups I've seen are kind of a usability layer right now on DeFi. What do you think about this usability thing?
Yeah, it's literally the primary barrier to growth in this space is usability. Even people like me, my colleagues, friends, associates, my network, people that know exactly what they're doing and how all this works, much less my parents, of course. I don't even bother to yield farm. And our CTO, Alex, he literally started building this because he was frustrated with yield farming, right? So, yeah, usability is absolutely everything in this space. The foundational mechanics are there, but they were built by developers for developers, right? So between developers building for themselves, if you've ever worked with developers, and I'm sure most of us have, you kind of know they're like, well, it works. So technically it meets the spec, but UX and UI sometimes go out the window because they know what they're doing. And then that kind of manifests across the space because, you know, Uniswap and then forked code across all the chains. And then you can't improve the user experience by forking code. You need to do it from the ground up. So.
Yes, so maybe you can also help interactive brokers to improve the user experience.
Well, Matthias, can I add on something? So yeah, we have been investing enormous effort on usability, UX, or DAPP. Yeah, but we are heavily dependent on the wallet, the usability of wallet. But I have to say that right now, you know, the usability of most of wallet are still very in a premature stage. So we hope that in the future, there will be a steep drop, you know, consolidating all those functionalities and create a super user-friendly wallet. So Coinbase wallet is on the right direction, but there are still a lot of improvement, to do. Yeah. So because our DAPP has to, you know, in combination with wallet, and if on the wallet end there are a lot of bugs or connectivity issues, so we cannot do nothing from our side. Yeah.
Mm-hmm. Yeah. Okay. Thank you. And I'm also curious a little bit, last question for me, about the chains you are using in the background. So as an IT nerd, I just would like to know kind of why you have chosen the chains you have chosen in the background and what the benefits are, and maybe also what chains in the DeFi space have the best future and why. And Tim, if you want.
That's a very good and very tough question. And to be honest, I'm asking myself the same question right now. I can tell you what are my I can tell you what are sort of my criteria for selecting a chain, because I'm saying this because right now we are on testnet. We're actually on the Polygon Mumbai testnet. We had our first version out on Polygon. We will be on several chains, but we're thinking now which chain to choose as the first one. And I mean, different chains have different advantages and disadvantages. Like Ethereum is clearly the most secure of them all in the DeFi space. And it's the one with the largest amount of capital on it. On the other hand, it tends to be extremely expensive, which makes it basically for small sums very difficult, for small amounts very difficult to use. So basically, you're pricing out the smaller users. I think, technically speaking, I'm a believer in layer 2 solutions. I think that currently the rollups look interesting, but yeah, it's a tough one. And to be honest, also it depends also where is the community, because when you're launching on a protocol as a new dApp, you also sort of like it's easiest to interact with the community. Which chain supports you the most? The new protocol, you need attention, obviously. But I haven't really come to a conclusion. So I'm more than interested to hear what you guys are saying.
And what do you say? What are you using?
Well,
yeah, we haven't decided. Yeah,
well, we are using Arbitrum, which is a roll-up solution on Ethereum. So for us, we had several criteria as well. First of all, it has to be Ethereum compatible, because apparently Ethereum has the most popularity. And second is the technical foundation. And well, there are several other roll-up solutions based on Ethereum. But for us, Arbitrum hasn't issued their own token yet. Yeah, so we know that they have raised like several hundred million, and some of our investors are simultaneously their investor. So logically, they will issue their own token sooner or later. Otherwise, how can their investor get reward, right? So once the Arbitrum will issue their own token, there will be a boost of their community, I believe. So this was our consideration.
And Rich, what are you using? You're using multiple or just one?
Us, yeah. We're chain agnostic, just because we want to capture and aggregate all the DEXs and bridge across the chains. Kind of hedging our bets, don't put all your eggs in one basket. As we saw very recently, a very major chain in market cap terms just completely failed. So I generally don't like to take a position on what's my favorite chain. I just like to build on any of them where we can capture TVL and users and see growth. And obviously, security is always top of mind. So unless we can find a security reason not to support a chain, we'll support it.
Okay, and all these, what do you think about all these DeFi protocols? Let's say Uniswap, Aave, and all these things. Can you just tell me the one that will die, basically, and the one that will survive, maybe, or is the best from your opinion?
In my opinion,
yes.
I don't know which one will die, because 2 weeks ago I would have said Terra is fine. So which one is the best foundationally? I think the general open source Uniswap protocol and code, I think it's rock solid, and there's a reason people fork that code, and it's because it's outstanding. However, you kind of dilute the value. You know, if you have one of something, it's valuable. If you have 1,000 clones of it, obviously you're diluting it, so to speak. So I very much like and support Ethereum layer 2 solutions. I'm pretty bullish on as well, and that goes for not just Ethereum, but also like Lightning Network on Bitcoin. So I think layer 2 solutions absolutely can work, and I think they provide kind of a side road to managing the fee marketplace and keeping costs under control for usability and practicality's sake. So that's kind of my stance on how I look at it.
And Tim, what would you say?
Yeah, well, it's difficult to say who's going to die. As Rich said, I mean, this can go quickly. There might be found a bug in the Uniswap code tomorrow, and highly unlikely, I would say, but nobody knows for sure. What I think is interesting, if you, for example, look at Uniswap compared to some other DEXs, Uniswap is not offering any tokens for providing liquidity there. Nonetheless, it's still the biggest in terms of TVL. So it shows you that there is really that there's a network effect, and this is something. If somebody new comes up now, you need to do something significantly better than the big ones in order to overtake them, because there is network effects.
Mm. And Yaan, do you have can you say who's going to die or what?
Well, if you go through a DeFi Llama or DeFi Pulse, there are like hundreds or thousands of DeFi protocols. I think we are right now focusing on the the biggest one. And as long as they are still stay on the top, I think there are a lot of room to improve. And I think the smaller one will die first, because running a protocol, and you have to absorb a lot of TVL. And if the big guys are still here, so it's quite difficult, unless for the smaller guys, if you have kind of unique cutting edge. Yeah, I think, well, DeFi world is already getting crowded.
Mm. But as you see in social media, TikTok also was late and is still getting a lot of market share. So you just need to be smart, but it's obviously harder. So I think there's a preference also for L2 solutions in the panel. So that's interesting. Just a quick questions. Do you think I need to sell my Ethereum because there will be a bug in the next update, or can I keep it? Just a personal question for my own advantage.
You never know, but I wouldn't be too concerned about that.
Okay. Good. I think also we cannot solve it. Alex, are you in the call again?
Yeah, I'm back. Got a little bit lost where we are, but I'm here.
Any questions from you, if you want?
Yeah, great. I think Vitalik, by the way, has enough Ethereum that you shouldn't be worried. He's probably more worried than you are, so he'll figure it out. So it's smooth in ETH 2.0. Have we dug into kind of deep dive into kind of challenges with decentralized exchanges? I guess pros and cons. That seems interesting to me. What do you think?
Rich, what do you think about
this? I wanted to jump in there.
I'll go with that. Yeah. So let's do it. Rich here first. So pros and cons of decentralized exchanges. Sure. Go ahead, Rich.
So somebody that's worked at and operated a centralized exchange and now working with all these decentralized exchanges. Obviously, there are pros and cons to each. As far as decentralized exchanges, one of the barriers that prevent them from overtaking centralized exchanges is API functionality and advanced trade execution, obviously cost. So the gas fees you have to pay on whatever network. And then obviously the speed of the transaction. If you're talking to an algorithmic trader, a market maker, somebody that just injects whatever they're trying to do into the API with the bot, a DEX, if you put them side by side, a centralized exchange is magnitude of order faster and cheaper to execute on. And that's what keeps all of that value on centralized exchanges, even though I think we all understand the risks of surrendering your custody of your funds and the possibility of a centralized exchange, running a fractional reserve or just, basically trading IOUs that don't really exist. Faster, cheaper, more efficient without sacrificing the security, decentralized exchanges, that would help them overtake the current dominance of the centralized exchange ecosystem.
Thanks for that, Rich. Great insight. Anyone else want to jump into that? Any pros and cons of decentralized exchanges?
Mona, are you investing in decentralized exchanges, or do you stay out of this part of the industry?
Me personally? Oh, sorry.
No, Mona.
Mona, sorry, Mona.
No worries. No, we don't. We do not invest in decentralized exchanges, much because of what was just said. Also, generally, I think, as an investor, we look for winners in the market. And right now, I think it's quite difficult to tell. Just like it's hard to tell who's going to lose, I think it's also quite hard to tell who's going to win, and how many winners there will be. So, and at the moment, I just find that, they're not really user-friendly enough. There's a lot of network congestions. There's liquidity issues. There's interoperability issues. And that all is too many factors and criteria to be interesting for investment for us right now. But, I think the industry is emerging very quickly. And it's improving, and there's a lot of smart people like these people on the panel that are developing solutions in that space, and that's like at lightning speed, right? So I think not that might change in the future, that we will start investing in a bit more formalized and safer, let's say, investment options.
Thanks for your insight, Mona. Anyone else want to weigh in on that? I know we've been kind of, we had a long agenda, and if we keep at it, we'll be here for 8 hours. But Yaan, do you want to enter?
Maybe just one sentence. So basically,
oh yeah, sorry.
I think I haven't used a centralized exchange for more than a year, and I've really tried to avoid it. Most of the things that Rich mentioned, sure. I mean, it's difficult. I used to play around with my own trading bots on Binance and Bittrex and stuff. You can't do that so easily on a decentralized exchange. Unfortunately, my trading bots were not good enough to be sitting now on the Bahamas or wherever. So I'm still sitting here in Germany. No, but jokes aside, there was one thing I wanted to mention with regard to what Mona said. I think the main reason why I would personally, I very seldom invest in coins of decentralized exchanges is the model that they build, that they use to bootstrap liquidity. Basically, they're giving away their own token for free for providing liquidity, and the liquidity is needed for these DEXs to be operational. But the downside is obviously that a large number of people are providing liquidity there for yield farming. But they're not really interested in the token, which is okay and normal, but they will dump the token. And therefore, I personally try to avoid these tokens unless, and I'm saying this because obviously our system is not so different from that. We will also have liquidity providers on issuer. there is tokenomics which support or give people an incentive not to dump the tokens, but for example, to stake them, to lock them away for a longer time.
Thank you for that. Does anyone else want to weigh in on that before I go to the next question?
Oh, sure. Tim's absolutely correct. A lot of tokenomic models for the native token of a decentralized exchange. Some of them don't even have supply caps. Look at cake and pancake swap. It's literally an infinite supply. Now they do have burn mechanisms and other tokenomic structures to control the overall outcome, but still, unlimited supply is unlimited supply. There's really no beat around the bush there. So I just wanted to say, Tim absolutely hit the nail on the head. A lot of these tokens are just given away for free, and they're dumped and turned back into whatever blue chip token the person actually wanted. So,
thanks for that. Next topic I'd like to explore, unless Matthias wants to redirect me, is ask the question, since we have a lot of folks from European sector or globally, what is your biggest concern regarding regulation in the EU zone, and as well as, let's say, you pick the US as well, but just what's the biggest concern in the EU zone, let's say, actually, in terms of regulation? So we'll go with, let's throw that to everybody. Rich, do you want to go ahead first?
I don't know if it's my place to talk about European regulations over here.
Okay, fine.
States, so.
We'll skip. What about Mona? Do you want to answer that one?
To be honest, I'm not a regulatory expert in no way or form, right? For me, an important point is to understand, I guess, where the market is going and if there's a risk that the startup will fail because the regulatory gap or knowledge is so large that, it's a very, very large risk if it's extremely innovative, let's say. So I think right now, and we're looking at the European Commission that is looking at regulating stable coins. There's the crypto rules over DeFi, and that this should be a European, European-wide regulation. In Germany, the voices have become loud recently, right after the Terra Luna crash. So I think right now, I'm just listening and trying to understand what is happening in the regulators' minds, who is advising them, who is lobbying in what direction, and why. And of course, right now I am in the United Kingdom. So the UK, is working on regulation and is right now, saying that banks need to provide information on how much crypto exposure they have and are planning to have. So I can see that there's a strong movement and a push towards this regulation. And my role is to monitor and to ask the startups that pitch to me what they have done to understand what could be the biggest barriers in regulatory sense for their success.
Thank you for that thoughtful, great answer. Go ahead. Yeah, sorry.
Hi. Maybe I can share some insight of a Swiss regulatory framework, because Switzerland is a small country and has always been independent, and there are less restriction in terms of making policies or regulations, because it doesn't belong to any organization, not even EU, right? And I remember since 2015, the Swiss regulator has already issued ICO guideline, and they keep updating it until 2017-18, when the ICO really was a hype. And then in 2018, they published the so-called DLT law, distributed ledger technology, and where they put very clear who can do what. Yeah, even from crypto wallet provider, custody, and payment services, IPO, crypto exchange. But until recently, since DeFi become very hot, and even in Switzerland, there aren't any clear regulation for DeFi. And there were some circular and discussion on staking, but eventually it didn't become to a law, right? So this is how it looked like in Switzerland. Oh, wow. In 2019, they issued guideline for stablecoin. Yeah, so.
Can I ask a question? I've read today in a post from a German lobby, or I think Peter Großkopf, a Medium post about the regulatory space, that he said that maybe we need like regulation as code, so that you have just define the rules and then put them into the blockchain or smart contracts, that you have like incentives for auditing, or that you have the regulation directly in the code and not so much in text and documents, and that then also the regulator is not basically just monitoring what is going on in the blockchain, just in a NASA kind of, or in a big war room, basically seeing what transactions are going on, maybe having some AI spotting some anomalies or fraud. What do you think about how maybe regulation also needs to change for blockchain and so on? Whoever wants.
And maybe, I mean, the problem with regulation and blockchain is the nature of the blockchain is that it is an open protocol, decentralized, and that you cannot force people not to put things on the blockchain. I mean, everybody can put whatever he or she wants on the blockchain, being it information or being it smart contracts, and I think and I hope that this will never change. So this is something you cannot regulate what people, because once it's there, you can't. It's immutable. Obviously you can have code that you can change stuff in your implementation, but normally a contract which is on the blockchain, it's immutable. You can't do anything about it. What you can do, obviously, is you can regulate sort of like how your fiat money is coming into the system, because you can't use with the real fiat account, you can't use DeFi, and obviously you can make sure that money is not flowing easily into these things. You can make sure that scams, which are obvious scams, or maybe just simply not something which shouldn't be promoted. You can make sure that there is no unreasonable promotion of protocols with which is basically fraud. That stuff like that you can do, but as I said, I mean, this is why we chose the way we have done our setup, is basically to do it in a decentralized way. I mean, I'm not trying to actively avoid regulation, but you simply cannot. I mean, it's because you are a worldwide protocol, you need to comply with regulation, and basically in every country in the world. There will always be some country where you don't know the regulation. So this is tough to do. And I think generally, yes, a better framework is wanted. If there is more regulation, it also means that there is more security, and security gives people an incentive to put more money into it. But then on the other hand, it's also hindering innovation and some stuff. I mean, regulation most of the time is looking at historic problems, and now there's new technology. And the historic regulation simply doesn't work out very well to deal with new technology. We've always seen that.
And what do you think about? I mean, you are trying to avoid the responsibility. I read also that maybe you can put the DAOs into a limited or in a company wrapper, so that it can also is compatible with the jurisdictions and can be sued and so on. So you actively trying to avoid it. And I read that they suggesting that they are just the DAOs just becoming companies, but actually they don't want to become companies. Yeah.
But they don't want that. I mean, this is clearly if you want to be a shareholder in a public company, you can do that. But I mean, DAOs. You always have to see a lot of organizations call themselves DAOs, but they are not really DAOs. I mean, that it's a nice marketing word, but you might have a DAO which is controlled by a multi-sig wallet with I don't know, 10 people, and all these 10 people are basically all this 10 addresses, but these 10 addresses are just all the same person. So that is not decentralized that in a way, but there's this and that, and yeah, I think there will always be people who say, okay, if you don't, I will not invest into a decentralized autonomous organization because there's nobody I can sue if there is something going wrong. But then there's others. So yeah, I'm a bit not sure what's the right way there.
I mean, if people are using a protocol or token or anything, the only thing that can happen is, or can happen that they just, as they say, you can use it, but at your own risk. If it's broken, then it's your fault. I yesterday asked CoinLoan what they do when they go bankrupt, what happens to the collateral tokens, and they have no security about it. They have an insurance for getting hacked, but if they go bankrupt, maybe your Bitcoin is gone. So I think that's not good for mass adoption. So I think for mass adoption, or if you want to increase size of the industry, you need to provide more trust. I also read about this identity providers that you maybe, for example, the user that you have like a data provider, you can also have an identity provider, so you can validate who's kind of doing the transaction. I mean, on Fiat 24, are you validating who's opening a bank account, your DeFi bank account?
Yes, exactly. So the NFT we are introducing is kind of identity token, identity NFT. It will be linked with client profile who has KYC with us, because otherwise we lose control of who is owing the money and who transfer money to whom. So imagine in case of any other stablecoin like even USDC, which is the most regulated or compliant stablecoin, but it can also be owned by terrorists, right? So there is no way for a Circle to block a terrorist to transfer USDC to another terrorist, right? So, but using the NFT concept, we know who has the control or who is accountable for that address, and who is transferring money to whom.
Okay, and maybe Rich, just a quick side note about the US. What are they doing better? Because I mean, US must be better.
So you all know about the XRP Ripple Labs versus the SEC ongoing case. It's all over the news, and ultimately that's distilled down to what constitutes a security or an investment contract in the US, and basically. This originated from a Supreme Court ruling back, I think it was in the 60s, and it was basically people they were jointly investing in an orange grove in Florida, and now we're trying to apply that logic to cryptocurrency, but that's just what it is. My general approach as a US citizen is, obviously we're a Web3 product, connect your wallet and off you go. There's only so much we can do, but one of the things we can do is we geofence, obviously sanctioned countries, but I geofence the United States, right? So my neighbor can't even use my product. And that's just out of an abundance of caution. And there's a lot of gray area and regulatory uncertainty and a number of ongoing court cases. And until that evolves and matures a little bit more, and it's gotten better. It used to be the complete Wild West, but until there's a little bit more maturity and concrete legislation, I'm just avoiding the United States myself. So.
And they're also protecting people, poor people without being accredited investor to use some of the products. What are they kind of restricting? What type of products?
I know it's similar. There's accredited investor in the United States. I know there's similar terms across the globe, but eventually, you have to be a friend, a family member, an industry professional with sufficient knowledge of the product you're purchasing, or you have to be wealthy. And they define wealthy by a number of metrics, but the primary one is just net worth. And, are you a millionaire, essentially? Otherwise, you can't participate in certain investment opportunities. So in my personal view, I think that's kind of unfair, right? The rich get richer, so to speak. But that's kind of the United States point of view, just because crypto is global and one continent impacts the other directly.
Yeah, in Germany they also protect the investors not using options too much. So I think also the only country that is restricting options. Yeah, very good. I think we have to close slowly. I have just a question about this interoperability of chains. I think, Rich, you have done some thinking about it. Can you just let us quickly know what you do and how you do this interop between the chains, or what you think about it? What are the great ways to use it?
Interoperability between the chains, just to be clear, that's what you're asking about.
I saw on your slides that you kind of trying to,
yes,
I think between connecting to different chains, basically, for example.
Yeah, certainly. So aggregating all the chains together, and necessarily that involves transferring assets from one chain to another, whether it's wrapping them or bridging or whatever the mechanism is. I know layer 0. I think Tim might have mentioned that, and that's a very interesting one. It's still kind of evolving, but I'm very curious to see how that happens. Anyway, interoperability with chains. Obviously, we've all seen in the news every other day a new bridge is getting hacked because it was hastily deployed to be the first to market to capture that TVL and make the profit. So
still early.
Technical, from a security standpoint, interoperability is hard, and that's kind of where I'm going to leave it from my personal point of view.
Okay, so I think it's 2020. Maybe can close it. I have a ton of more questions, but maybe we have to meet again. Just quickly, maybe what is your one wish for the further development of DeFi? Maybe everyone just quickly, starting with Tim, if he wants and is ready. If you could have one wish for DeFi, what would be it?
Yeah, it's a very, very difficult, very tough question. Just one wish, but I'll try to sneak in two into one. That more people are actually taking the opportunities that are arising from DeFi, and at the same time don't fall for a scam with their first try. That would be my biggest wish.
And Yaan, what do you think?
Well, I wish there will be a crypto wallet that is designed and developed by Apple and pre-installed in April 14.
Okay, that sounds centralized. Okay, and Mona, what do you think? Any wish for DeFi that it becomes maybe more investable?
I wish for true interoperability that doesn't well, doesn't reduce security. And I also wish for the possibility for mass adoption and more user-friendly interfaces so that more people can benefit from this versus having a really tough time entering and being dragged into maybe things that are not ideal.
And Rich, do you think?
My one wish for DeFi, just to cap off what everybody else said, I hope one day my mom can use it. That's my wish. Seriously. Like,
I'm trying to convince my father currently. I'm still in the progress.
Yeah. So if we can navigate all of the risks and UX problems and distill it down to something that our parents can use and we would be comfortable suggesting they use, that's my wish for DeFi.
Yeah. Wonderful.
I'll jump in there if you want.
Yes, please.
My wish for DeFi is that essentially the free market is actually able to operate, meaning, in a free market, all participants, if they're aware of the fact they can get a product, not crazy interest. We saw Terra was unsustainable, 20%, but let's say you can get 6% interest on your money when there's, let's say, 6% inflation, or you can get 0.1% interest, right? You can get a loan at 8%, or you can get a loan at 25%. Any free market would logically take that product of 25% interest loans and 0.01% interest savings and essentially burn it to the ground, which is centralized banking, right? At least in the United States. I don't know if it's any better anywhere else, but no one in their right mind would choose that if the product is stable. They're essentially afraid of crypto or whatnot, but DeFi can get up to the place where that's stable and the regulators can either get out of the way or write proper regulations or stop, supporting the banking lobby. The free market will replace traditional finance with decentralized finance or adopt it and adopt sensible interest rates. So either way, I hope the free market is allowed to bring the best product to the average person, not just the multimillionaires.
That's a good wish. It doesn't sound like you're voting for the Republicans because it's trying to bring it to everybody. Okay, and Yaan, any last words on this?
Not really.
Good. Wonderful. And last question, maybe just quickly, because there are a ton of websites and communities and so much going on. What's your favorite guru that you're following, where you can get the greatest insights, feeling inspired? Maybe you can just tell it to us and then put it in the chat that people can just follow them. Don't say Michael Saylor, please.
Well, I spent a lot of time on watching Coin Bureau's channel and Guy. So I wish one day I can meet him in person.
I agree with that. I would have said the same person. I've been watching the videos religiously. It is quite well done, I have to say.
Wonderful. So there we have 2 votes for Coin Guru. Tim, what are you watching? Which gurus are you following? Or
I'm actually not watching any videos at all, so, or hardly any. I get most of my information either from direct contacts from people I speak with. That's most of the times the best ones. My daily information newsletter I read every day, not to the full, is a newsletter called the Daily Ape on Telegram. That is my prime daily information, actually.
Wonderful. It sounds like yeah, like you described your day job in the past. No, the daily. Just a joke. Rich, what do you think? What are you? I think you're reading about Alex website, of course.
Yeah, I have my own website, and I keep an eye out so I can make it better. And obviously, Cointelegraph, some of the better ones for the crypto news, and then Decrypt is another good one. I also keep an eye on I like to look at traditional finance from both the middle, politically, as well as the left and the right. So I like to take a story and look at it on what is, kind of CNBC saying, what is Fox saying, and then what is Wall Street Journal saying, so I can kind of see, because the left and the right are going to slant the same news in a different way, and then the kind of Wall Street Journal usually plays the middle. So I like to look at all angles before I figure out what's actually happening, because usually neither side is telling the full truth. So that's my traditional finance to balance the crypto.
Mm-hmm. Yeah,
my vote. I'm going to say Andreas Antonopoulos. He's the original crypto influencer. He wrote the books on, literally wrote the book, Mastering Bitcoin and Mastering Ethereum. He's got a YouTube channel. He's one of the most humble and intelligent guys around. He's presented in front of various parliaments and government bodies, arguing in favor and support of what we're all trying to do. And he's been doing it since, like I mentioned, he was doing presentations when the room was empty, and he was doing them anyway. So he's been around forever. Like I said, the original crypto influencer and the guy I would look up to the most.
Can you type it in the chat? I can't.
Yeah, I actually already did. I shared his YouTube channel, and I typed his name because it's a long Greek last name that's easy to misspell.
Okay. Yeah, I think I know who you mean. I've seen him also like 4 years ago, but he was overtaken by all the other crypto YouTube gurus. So I think he needs more YouTube SEO and so on.
I think, having said that, I don't watch any videos, that Andreas is actually the one exception. I haven't watched videos from him for a while. But especially when I was starting to get into the space, I was really watching basically everything he had ever produced.
Mm-hmm.
I guess, I mean, he's more sort of like the technology, explaining the technology behind it, the philosophic stuff as well. He's not giving you any investment ideas where you can get the best yield tomorrow, for sure not. But I've also read Mastering Bitcoin, Mastering Ethereum as well. So he's really a great presenter and a great person actually to introduce people into the blockchain world.
Wonderful. Then I will also maybe look for his older videos and newer ones. So I would like to thank you all for being in the panel. Also Alex for moderating, and also coming people online from so far away, like Denver and Palm Beach, and even near Frankfurt, maybe Tim, and Switzerland and London and so on, and even Cologne, like a small town. Yaan, any last words from your end?
Not really, but like I would like to mention that it was very interesting. Listen to you. I'm not a DeFi expert, to be honest. I learned a lot, and yeah, so we will publish the recording after the meetup, so probably tomorrow or the next days, on our YouTube channel, and then of course send it next week through our newsletter channels to the world. So, and if you want to share our content, please do it. We would like to grow a little bit. So also, I would like to remind you about our Telegram group. Maybe you have some ideas what we can do better. So please share it to us. And I realized that we don't have a hashtag yet. So like I created one. So I posted this into the chat, and maybe you can just share your part of the video story to your crowd and to your friends. And thank you very much.
And we see you all in September. We haven't chosen a date. We want to enjoy the summer, doing nothing, basically, being in the lake until we still have some until they are gone because of climate change. And just enjoy the summer, and see you soon, and maybe follow our LinkedIn site so that you can see also the next event. Thank you very much.
Thank you, Matthias. Amazing space. Thank you.
Thank you, everybody.
Thank you very much.
Pleasure.
Thank you.
Good evening. Bye-bye.